Good morning, investors. You are now on KleverStock with me, Ainunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened higher on mild bargain hunting while tracking the positive sentiment from the overnight Wall Street, said an analyst. 9:10 a.m., the FPM KLCI added 0.54 of a point to 1,611.49 from Monday's close of 1,610.95. The benchmark index was 0.87 of a point higher at 1,611.82 at the opening. Now, market breadth was positive, with gainers outnumbering losers 208 to 126, while 303 counters were unchanged, 1,978 untraded, and 81 suspended. Turnover stood at 213.66 million units, worth 77.74 million ringgit. Now moving on to local currency update. The ringgit opened stronger against the US dollar on Tuesday, supported by concerns that a potential United States-US government shutdown could weigh on the greenback. Reports indicated that the US federal government is on the brink of a shutdown unless the US Congress reaches a funding agreement before the start of the new fiscal year on October 1st. At 8 a.m., the local note stood at 4.2125 or 4.2210 against the greenback, compared with Monday's close of 4.2150 or 4.2200. A Bank Muamalat Malaysia Bursa Chief Economist Dr. Muhammad Afzal Abdul Rashid said a U.S. government shutdown would be significant as it could hamper the functioning of key agencies such as the Bureau of Labor Statistics. He noted that the release of important data points such as the non-farm payroll report due this Friday might be delayed. He said if materialized, it would result in difficulties in discerning the latest trend in the U.S. labor market at a time when the Federal Reserve has highlighted increased downside risk to the employment. Muhammad Afzal said the US dollar index DXY was down about 0.25% to 97.906 points. He noted that the ringgit, which gained 0.21% to 4 ringgit and 21 cents against the US dollar yesterday, is expected to trade between 4 ringgit and 20 cents and 4 ringgit and 21 cents today. He added, again, the ringgit could attempt to breach the psychological level of 4 ringgit and 20 cents, especially if the Fed proceeds with interest rate cuts should a government shutdown occur. At the opening, the ringgit was mostly higher against a basket of major currencies. It firmed to 2.8340, 2.8399 against the Japanese yen. It increased to 5.6582 or 5.6696 against the British pound, but declined to 4.9405 or 4.9505 versus the euro. The local note was also mostly higher against ASEAN currencies except for the Thai baht. It advanced to 3.2653 or 3.2723 vis-a-vis the Singapore dollar, edged up against the Indonesian rupiah at 252.5 or 253.1, appreciated versus the Philippine peso at 7.24 or 7.26, but eased to 13.0669 or 13.1002 against the Thai baht. Continuing with some local economic updates. The Investment, Trade and Industry Ministry has launched the Steel Industry Roadmap 2035 to tackle overcapacity in the sector and drive sustainability. Minister Tengku Datuk Seri Zafrul Tengku Abdul Aziz said Malaysia is grappling with a sharp imbalance between supply and demand. Domestic projections show upstream capacity could reach 40.8 million tons by 2030, while domestic demand is only 14.7 million tons, said the minister. Tengku Zafrul said this gap highlights overcapacity, assets underutilized, poor return on investment, and market conditions weakening competitiveness and resilience. The roadmap provides a pathway to stabilize, restructure, and transform the local steel industry in line with the new Industrial Master Plan 2030, the National Energy Transition Roadmap, and Net Zero 2050 target. Now, it sets out 15 strategies across 3 phases, starting with stabilization efforts in the first 2 years. This includes managing overcapacity, restructuring licensing, enforcing discipline against illegal operators, securing domestic raw materials, and laying the groundwork for decarbonization. He added from 2027 to 2035, the roadmap shifts to transformation, including accelerating carbon mechanism, developing low-carbon production infrastructure and standards, and reinvesting in new technologies to build capabilities. Now, beyond 2035, the aim is a fully green steel sector by 2050, mobilizing talent and capital to keep Malaysia's steel industry competitive, resilient, and aligned with net zero commitments. He added that the national roadmap should also contribute to ASEAN's sustainability efforts. Malaysia has proposed a regional cooperation framework, including a shared database on capacity and utilization to improve transparency and guide responses to overcapacity, dumping, and transshipment. Regional efforts could also involve a common decarbonization pathway with full monitoring and harmonized green steel standards. The Guzafrul said our steel industry stands at a crossroads. The choices we make today will determine whether ASEAN's steel sector becomes a driver of growth, resilience, and sustainability, or remains burdened by old challenges. Separately, the ministry said it is drafting a steel industry bill to strengthen oversight and improve governance of the sector. Deputy Minister Liu Chin-tong said a consistent and transparent framework for managing capacity is critical, particularly given the rising need to monitor utilization rates. Global steelmaking capacity is projected to grow by 6.7% or 165 million tons between 2025 and 2027, further worsening excess supply. Asian economies are expected to contribute 58% of the new capacity, led by China and also India. In ASEAN, steel capacity of 84.6 million tons is forecast to double to 169 million tons by 2035, driven by 57.7 million tons of new blast furnace capacity and 26.8 million tons from electric arc furnaces. So the mechanism governing the industry, including the Malaysia Steel Institute, need to be strengthened and further institutionalized. He said this is why there is now an effort to draft and present a steel industry bill to the parliament. This was said by Liu at the 2025 ASEAN Iron and Steel Forum. And now moving on to corporate news updates. Malayan banking Berhad Maybank has emerged as a single largest shareholder in Vantress Energy Berhad. This follows Vantress' landmark restructuring exercise, marking a significant institutional consolidation in the restructured energy firm. The former Sapura Energy Berhad issued a 1.36 billion new shares on September 26 under its regularization plan, expanding its issued base from 918.79 million to 2.28 billion shares. Now, following this, Maybank holds 462.45 million shares, or 20.27%, comprising 421.67 million directly and 40.78 million through Maybank Islamic Berhad. Other substantial shareholders include Amanah Sahab Bhumiputra ASB via Amanah Trustees Berhad with 339.71 million shares, or 14.89%. Institutional investor Permodalan Nasional Berhad PNB now holds a dual stake in Vantress through its significant interest in Maybank as a majority shareholder and in ASB. CIMB Group Holdings Berhad reported an indirect interest in 276.66 million shares, equal to 12.12% through CIMB Bank Berhad and CIMB Islamic Bank Berhad. Khazanah Nasional Berhad was deemed to hold the same stake by virtue of its associate interest in CIMB Group. RHB Bank Berhad and RHB Islamic Bank Berhad collectively own 164.56 million shares, or 7.21%, rising from a debt to equity swap Singapore's United Overseas Bank Ltd UOB secured 138.39 million shares, representing 6.06% under the same restructuring terms. Meanwhile, Dato' Syariman Shamsuddin ceased to be a substantial shareholder after his stake was diluted by enlarged share base. Vantris, which remains under practice note 17 PN17, said it now focuses on sustaining profitability through an operational turnaround as part of efforts to exit PN17 status. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Gamuda Berhad's wholly owned subsidiary, Gamuda Singapore Pty Ltd, has secured a 3.3 billion ringgit of leasehold land in Chencharu Close before the Housing Development Board of Singapore. And Capital A Berhad has exerted the deadline to complete the proposed disposal of AirAsia Aviation Group Ltd and AirAsia Berhad to October 31st, 2025 to allow additional time for approvals from the relevant authorities and financiers. Country Waits Holdings Berhad said a winding petition filed against its wholly owned subsidiary Golden Horse Palace Berhad has been withdrawn following a full settlement of 142.698 ringgit this month. Johor-based Haley Group Berhad has secured a 2 contract worth a combined 197.6 million ringgit for the construction of a 54-story service apartment block and accompanying shop units in Johor Bahru. And last but not least, Messi Niaga Berhad has accepted a 135.6 million ringgit contract from the Ministry of Finance for the provision of marketing technology system development series and the comprehensive hardware to be the Royal Malaysian Customs Department. Now that's a wrap for Morning Bell Updates with me, Anujaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.